Hello, everybody. Thank you all for joining. It is Wednesday, and it's been a crazy day. Markets have been all over the place, but I do have a surprise. This is called Trillions, and I'm going to talk about trillions and how small trillions are these days and how big they are, too. Also, why certain things don't move and why other things do. And I've got to try to get this done in 18 minutes, go to the TSLA Earnings call, and then about an hour and a half, and I'll be back with another video that I was supposed to do yesterday. I couldn't do that one yesterday because things changed in the markets with pricing. So the Sol Alt number 5 will be later today. So watch out for that too, for those who are interested in finding some very risky opportunities that may or may not pan out. So let's go. Thank you all, and thanks to the mods in the chat as well. Let's make this happen. Trillions is the name of the game, and I'm going to be fast today. There's a disclaimer. Don't forget to subscribe if you want to get smarter. First of all, we are 80 days away from the Bitcoin halving, which is not very much at all. And if you look at these previous curves from this exact point in time, thank you so much, MT. And again, thank you, K8 and Cat with a K and everybody for joining and helping us. But here, if you look at these relative curves over the last cycles, we are now at that 80-day away level. And what happens to Bitcoin price when we are 80 days away? Woohoo! Well, it typically goes up. And that's where we are right now. But the difference this time is we have the ETF effects combined with the GBTC effects and a whole bunch of other effects. So the question is, will this future curve for this fourth run be more vertical? I believe so. We'll talk about that in a second too. In addition, the number of Bitcoin whales are growing fast. These are the 1,000 plus Bitcoin holders. Shout out to Sanjay for sharing with me. It is increasing. The count has grown from about 1,480 to 1,513. That's nearly a 2-year high, while the whale withdrawals have been outstripping deposits for 6 consecutive days. So it's not perfect, but it's up and to the right. And remember, 1,000 Bitcoin is a lot, and there's very few of them, but like, again, crazy numbers. Maybe a part of that is because of the ETFs. Now, I do have my ETF tracker. I share it on Patreon every day, and here you go. This is day 8. Track all the movement, all the money flows, and there's a little bit of mixed news. A couple of things just to cast your eye on the chart. You'll see the green line at the bottom, and that means the grayscale outflows are not as intense as they were over the previous 3 days. It's letting up slowly but surely. And I did say yesterday's video in Octa, the bottom was close and the market rebound, we got above 40K for a little while yesterday and today. And the market rebound indicates that the grayscale is slowing. Now, bad news is they are still dumping, but not as much. And BlackRock seems to be slowing a bit today, at least yesterday, day 8. But the good news is BlackRock now has 44,000 Bitcoin under management in just 8 days. Fidelity, 40,000. And the majority of the FTX sell-off is done, which is good. And the ETFs absorbed not only the 101,600 Bitcoin dumped from Grayscale, but they also consumed an additional 21,100 Bitcoin. The ETFs alone are sucking in 15 times the daily amount of Bitcoin created. If you divide 13,444 divided by 900, that's your number, which will go to 30 days of supply eaten every day by these puppies, and they're just accelerating. In addition, let's look at the money flow. You can see here the outflow out of GBTC and the net positive of $1 billion into these funds. In addition, 1/6 of Grayscale is gone in 8 days. It's been around for years and years and years. 1/6 disappeared in 8 days. And more than that 1/6 of that huge amount of 619,000 Bitcoin has been gobbled up by the others. Thank you so much, Linda. So this is crazy to see. The demand is there, despite the FUD you hear out there. We just look at numbers and they tell you a different story. Now, another good news too, we can now track in real time how much some of the funds are actually holding. This was announced today by Bitwise. They are the first ETF to publish their own Bitcoin address of its holdings. I love that. I love transparency. I love data. But now anyone can verify. BITB is the ticker for Bitwise, their holdings, and that flows directly on the blockchain. And on-chain transparency is core to two Bitcoin ethos, getting my all messed up. That is big. And I went and checked the address, and I love the transparency. And here it is. You can see they've done 16 transactions. They now have exactly 11,858.6 Bitcoin in their bag. And we can all check it every day. So I'll drop a link for this address too. Save it as a favorite and watch it. And I hope the others come as well. Now, there's a beautiful little graphic, again, just to show you what I've been talking about for years, the supply shock. But this just gives you a little bit of a graphical perspective. First of all, you've got green, the total amount bought by the Bitcoin ETFs. The numbers are slightly different to mine because mine are more up to date. You got grayscale, the amount that they sold, 67,000. And then you got the Bitcoin mined per month. All right, we're looking at just 7 days of accumulation here. You look at the amount mined per month is only 27,000. And in 80 days, that's going to become 13,500. These guys are gobbling up 120,000 in 8 days. And soon they'll only be 13,500 a month. And that assumes nobody else on the planet is buying Bitcoin in any fashion. This is going to crunch hard soon. In addition, people are freaking out. Bitcoin lost 12%. We're all going to die. But when you compare the Bitcoin drawdowns at this point in time to previous bull markets, it's very timid. It's very timid. Look at some of the big names here in the past. You can see many. I think last time around we had two greater than 50% drawdowns. Two of them. And the typical corrections are greater than 25%, and a whole bunch of them, like we're talking 8 or 10. And we had some really nasty ones in the early years as well, down as much as 62%. So again, it's much calmer now. And if you can't tolerate 20% downturns in Bitcoin, it's not the game for you, I'm afraid. In addition, the ETF impact on digital assets, post all the ETF speculation, yeah, there was a bit of a buy the rumor, sell the news, but digital asset markets have experienced a very strong performance since mid-October. Remember, we came up an awful lot, all heavily dominated by this ETF narrative, which many people thought would never actually happen. And Bitcoin's market cap has increased 70% since BlackRock first filed for their ETF. And the aggregate altcoin market cap followed suit, rising by 69%. The Bitcoin one is 68.8 and altcoin 68.9%, almost in lockstep, while Ethereum underperformed, lagging the rest by about 17%. So that's the big message there. Ethereum has been a real stinker this time around. Now let's talk about dominance time. Rarely talk about dominance, but zooming out, we can see here that Bitcoin has generally been increasingly dominant over the past few years, as ever since the FTX collapse. It's funny, we're still having that nightmare of FTX hit us with their dumping of GBTC over the last 6 days. But that was November 2022. But since then, Bitcoin has increased its market cap dominance, going from 38.9% to now 49.8%. On the other hand, ETH has gone from 18.9 to 18.2. And if you look here, the stablecoins have decreased their share from 13.9 to 7.8, which is good because typically there's a rotation. When the markets are, let me zoom out for this, when the markets are frothy, people sell and they move into stablecoins and they park their money in stablecoins. So when the market's in a bull run, you expect that to go down, which it has as well. In addition, you can see here, the altcoins have gone from 28.3 to 24.2% dominance as well since that November date. Now, let's talk about ETH versus Bitcoin market cap dominance, kind of like what I just summarized. The Bitcoin to ETH has gone down a lot for Ethereum, despite the recent spike of up 2.9% over the last week or two. For Ethereum, much of that was sell the Bitcoin ETF rumor and then be hopeful for the ETH ETF rumor. But the SEC, basically, I heard today, slammed their fist on the table saying, nope, we're not going to approve it. But many of the experts in the space believe they are. And again, there is no leg for the SEC to stand on to deny the spot ETH ETF if there's an ETH future product already there. That was the main premise of the last lawsuit that got the ETFs approved. Or maybe it's just Larry Fink making a phone call. ETH futures as well. ETH markets experienced a trade volume of 21.3 billion a day, surpassing the average volume of about 14 billion in 2023, but it's still very far from the levels we saw in 2021. So way, way, way off. So a lot more action to come for ETH futures as we go forward. ETH realized price as well. Concurrently, the volume of net profits locked in by ETH investors has reached a new multi-year high. You can see that profit taking heavily, probably because of the big sale made a couple of days ago. And while profits taking has increased since mid-October, the peak on 13th of January reached over $900 million worth of profit taken per day. And that is in line with investors capitalizing on the sell the news momentum. So again, there's a lot happening out there, and a lot of the long-standing people are actually selling right now. Let's talk about the NUPL. This is the net unrealized profit loss for short-term holders, and you can see here this has crossed 0.25 for the first time since November 2021 all-time high. This suggests both a degree of optimistic sentiment is kind of creeping in for Ethereum, but also a level where markets tend to take pause and take profit at the same time. And historically, this sentiment shift for short-term holders has coincided with local peaks during a macro uptrend. Again, nothing goes straight up. There's always a breather in between, and that's exactly what this represents here right now. Let's look at Solana to Bitcoin ratio from the team at Glassnode. This is the big question, is Solana the new ETH? Well, the team at Glassnode believe it probably is. And digital assets, you can see here, are extremely competitive. And ETH is not only fighting for capital flows versus Bitcoin, but also relative to layer 1 blockchain tokens. And Solana was a huge standout of 2023, up 860%. Since then, it's taken, like all the other assets, taking a bit of a breather so far this year. But I do expect things to return. And Sol has gained considerable market share over the past 12 months, not only with the Sol BTC ratio fluctuating between 0.0011 and 0.0005, but it has increased over 300% since October 2023, significantly, absolutely destroying Ethereum, but also beating Bitcoin as well. So we'll see what happens. And also I've shared as well quite often the money flows from the ETH network to the Solana network, and that is also very impressive. In addition, the two sectors that are actually red hot right now, staking and GameFi tokens, have outperformed Bitcoin as well since late last year. The staking token Bitcoin ratio rose by 103% in early 2023, but then you can see it fell off again by 65%, found a bottom in December, and then it's been on a rampage ever since. Also, the GameFi token increased 55% in Feb 2023, and since then, though, it's decreased by 75%. And scaling tokens as well, and not to forget those, they have also done quite well, and they've risen 95% in Q2 and Q3. 2023. Arbitrum is the one that's smoking them all right now. Arbitrum is definitely the new Matic killer, Polygon as they call it, I think. Now, we're going to switch gears to a little bit of equity stuff. We have an interesting company which has not had a good year so far, but I just want to put things in perspective. And a shout out to Peter Lynch, guru of all times. And this, if you are an investor in stocks, this slide really has so much to say. First of all, the PE ratio of any company that's fairly priced will equal its growth rate. Say a company with a PE with a growth rate of 12% per year and a PE of 6 is a very attractive prospect. You want growth to outpace the PE ratio. And on the other hand, a company with a growth rate of 6% a year and a PE of 12 is an unattractive prospect and expected to come back to earth. When you look at this chart here, you've got certain names. NVIDIA, PE 343.6%, Meta 42%, Tesla 57%. Some are extremely high. AMD 200%, again chasing up that 343% from NVIDIA. But the question is this sustainable? And is the growth there to satisfy these extortionate PE ratios? And that is also the question. So let's break these down and then circle back to a couple of names. First of all, this is staggering. And I shared something like this a week or so ago, but NVIDIA added $320 billion of market cap in 3 weeks. NVIDIA officially smashes $1.5 trillion and is now up 27% in 2024 after a massive year last year. And that is just mind-blowing. And obviously AI is truly changing the world, and it's commanding massive, massive premiums. Let's see where 320 billion stands, just to give you a perspective of how much money that is. Again, it's $1.5 trillion market cap, over that right now. But if you look at this, that's somewhere between the size of Hong Kong and the Islamic Republic of Iran in terms of size. So it is massive, and way bigger than Colombia and Romania and Chile, etc. 3 weeks of capital market gain is bigger than Iran economy or Hong Kong, almost, pretty much, which is staggering. Forget about the size of the company itself. That's bigger than most countries in the world by far. But that's just a staggering statistic. Let's look at the breaking 1.5 trillion, what the chart looks like. Again, it's been a rocky road. Disruption is a rocky road. Market cap now 1.52 trillion. And again, up 1,436% in the past 5 years. Not bad. But there's another trillion game in town. There's Microsoft breaking $3 trillion on the nose, up 276% in the last 5 years. So that's 276 versus 1436. Interesting. Now, what is it about these two companies? And NVIDIA, yes, they design chips for AI, but TSMC makes them. They don't actually make anything. They design them. So they're brilliant designers, but they don't have an integrated value chain. And then Microsoft, they make acquisitions and they milk them. And that can be quite controversial when I say they haven't had a successful product rollout in 10 years, unless they bought it, whether it's ChatGPT or whatever else. They're just falling behind. But they're now the biggest company in the world. Insane. And they don't do anything specially good. Their Google, their search engine, has, I think, 6 or 7% market share. Google has 92%. So, and they've been in search for years and years and years and have not been able to pierce Google. But Microsoft is the biggest company in the world. There's more. Tesla does more than both of these companies combined. Has more IP, more AI. They design their own AI chips. They have more AI data than any other company on the planet. And they have cars that drive themselves. And they're building a robot. And they're the leader in energy storage on the planet. And yet, the market hates them. But still, it's up 1,000% in the last 5 years. But it's been a very rocky road. And yes, it has not met expectations. But it will. It reminds me very much of watching Solana in 2022 get a black eye. Similar story here. Cream eventually floats to the top, and I've analyzed both things extensively, so we just have to be patient. The earnings did come out. Quick summary here. The earnings per share was 71 cents. Half of the market was expecting 73%. Not everybody. Some people had low expectations, some people had high. That's the average. EPS, $2.27 per share versus 59 estimate because they got a big tax break. But that's big, $2.27 a share. Revenue, $25.17 billion, less $25.7 billion. Remember, they had a big boat with thousands of cars on it that couldn't get to Australia, so they couldn't recognize that revenue. That could be part of the shortfall as well. And total GAAP gross margin, 17.6%. Again, not cataclysmic, but it was also a very rough year. So expect good things going forward. Again, this is one we just got to be patient with. But in the meantime, we play in crypto because that's where a lot of the action's going to be this year. Anyway, credit card delinquency as well is exploding, unfortunately. Wells Fargo is approaching 3% of all credit card holders being delinquent by 30 days. This is going to get a lot worse before it gets better. And again, check out the charts I shared on Patreon last night with the amount of debt. Stunning statistic. I think the bottom 50% of Americans own 5.8% of wealth, but the bottom 50% own over 62% of the debt. So they got no wealth and 2/3 of the debt, which is just shocking. So everybody get out of debt and grow in exponential assets. That's your ticket out of here. That's why we make videos here as well. And speaking of debt as well, nobody wants US debt anymore. US debt held by foreign investors. Shout out to Econometrics here. You can see it is down 23% to a total of 7.6 trillion, up from, I forget what it was before, but it was an awful lot higher. The top was at 35%. So the point is, foreign investors, foreign governments are no longer buying US Treasuries. They're saying no thank you. And if this was a stock chart, I'll tell you, it's going to get worse. And it may never get better too, because the money printing is simply too much. And I don't know if I missed something here. I think that was it. So thank you all. I'm going to jump to the Tesla earnings call. Any good notes I will share and summarize later. And in about an hour from now, you'll get another video from me for those who are hardcore crypto people. Thank you all for coming. Sorry for being in a rush. Thank you to mods in the chat. And I'll see you all later today. Bye-bye.